Welcome to Bitcoin Dorks, your daily dose of cryptocurrency news and updates. In today's video, we're going to talk about the recent spike in Bitcoin's price as it rivals a 10-month high. We'll also discuss how the recent CPI data beating expectations has affected the cryptocurrency market. But first, let's do a quick recap of Bitcoin's price over the past few months. As we all know, Bitcoin's price has been quite volatile since its inception. However, the price of Bitcoin reached an all-time high of $64,000 in mid-April 2021 before dropping to as low as $29,000 in July 2021. Since then, it has been gradually climbing back up, and as of today, Bitcoin's price is hovering around $59,000. Now, let's get to the main story. Bitcoin's price has recently been on the rise, and it's all thanks to the CPI data beating expectations. CPI stands for the Consumer Price Index, which is a measure of the average change in prices over time of goods and services purchased by households. This data is released by the U.S. Bureau of Labor Statistics every month. You see, Bitcoin is a decentralized currency that is not controlled by any government or financial institution. It's limited in supply, and its value is determined solely by market demand. Therefore, many investors believe that Bitcoin is a safer investment option during times of economic uncertainty. Moreover, the recent CPI data has also affected the stock market, with the S&P 500 dropping by 0.4%. This shows that investors are starting to worry about the impact of inflation in the economy. In such a scenario, Bitcoin seems like a viable alternative investment option. However, it's important to note that Bitcoin's price is still quite volatile, and it's not a guaranteed safe investment option. Its value can fluctuate wildly based on market demand and various other factors. That being said, the recent spike in Bitcoin's price is undoubtedly good news for the cryptocurrency community. It shows that Bitcoin is still a popular investment option, and its value can rise significantly in a short period. Firstly, let's understand the impact of inflation on the economy. Inflation occurs when the general price level of goods and services in an economy increases over time. This means that each unit of currency can purchase fewer goods and services than before. Inflation can have a significant impact on the economy, causing an increase in the cost of living, lower purchasing power, and a decrease in consumer and business confidence. To combat inflation, central banks around the world often use monetary policies such as adjusting interest rates and controlling the money supply. However, these policies can have unintended consequences, such as economic recessions and financial instability. This is where Bitcoin comes in. Bitcoin is often considered a hedge against inflation as it is a decentralized currency with a fixed supply. The total number of Bitcoin that can be mined is limited to 21 million, and no central authority controls the issuance or distribution of the currency. In times of economic uncertainty, investors often turn to Bitcoin as a store of value and a safe haven asset. This is because Bitcoin's value is not tied to any government or financial institution, and its supply is limited. As a result, Bitcoin's value can rise during times of economic turbulence, making it an attractive investment option. Now, let's take a closer look at the recent CPI data that has caused a spike in Bitcoin's price. The latest CPI data shows that consumer prices have increased by 0.6% in March 2022, which is higher than the expected 0.5%. This increase in inflation has caused many investors to turn to Bitcoin as a hedge against inflation. Bitcoin's price can be extremely volatile and unpredictable, and it's not backed by any physical asset or government guarantee. Additionally, Bitcoin is still a relatively new and developing technology, and there are still concerns about its security and regulation. However, despite these risks, Bitcoin has proven to be a popular investment option, especially among younger investors who are looking for alternative investment options to traditional assets like stocks and bonds. According to a recent survey by Gemini, a cryptocurrency exchange, nearly 70% of millennial investors prefer Bitcoin over traditional assets. Furthermore, Bitcoin has also gained widespread adoption in the mainstream financial industry, with major companies like Tesla, PayPal, and Square investing in the cryptocurrency. This increased adoption has helped to legitimize Bitcoin as a viable investment option and has led to increased interest from institutional investors. So, what does the future hold for Bitcoin and its price? Well, it's difficult to predict, as Bitcoin's price is subject to a wide range of factors, including market demand, regulatory developments, and technological advancements. However, many analysts and experts believe that Bitcoin's price will continue to rise over the long term as more people adopt the cryptocurrency and the market matures. Some even predict that Bitcoin's price could reach $100,000 or even $1 million in the coming years. In conclusion, The recent spike in Bitcoin's price is a result of the CPI data beating expectations and the increasing demand for Bitcoin as a hedge against inflation. While Bitcoin is not without risks, it remains a popular investment option. That's all for today's video. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to our channel for more cryptocurrency news and updates. Thanks for watching, and we'll see you